والآن مع شركة توب فوركس ومستر أليكس كاتساروس.
Let's see. Okay, now it's working. So, my name is Alex Katsaros. I'm the CEO of TopFX. Sorry, but I don't speak Arabic, so you have to bear with me. I hope that you guys understand English. The presentation is a little bit complex, a little bit more complex than the presentations that you're used to here, because we're going to talk about risk management. It's difficult to say everything about risk management in 15 minutes, but you're going to, after the end of the presentation, you're going to understand at least the basics of how you should be thinking and protecting your account when trading, like Forex or stocks or actually anything. Risk management is important for every trader or investor. So let's move on with the presentation. First of all, a couple of things about TopFX. TopFX was founded in 2010. We've been in the business for 12 years. We're regulated by the FSA in Seychelles, and also by SciSec in Cyprus. We're a leading provider of prime services to a global clientele. So we started from business to business, and we were most experienced in business to business for like 5-6 years. We were only doing that, but now we accept retail clients as well. However, we are mostly accustomed to be working with high net worth clients, and we do tailor-made solutions for brokerages. The benefits of TopFX: we're a liquidity provider with 10 years of history, actually 12 now. We offer swap-free Islamic accounts, raw spreads starting from 0.0 pips, C-Trader and MT4, 99% uptime. You can trade FX, metals, energies, crypto, stocks, and ETFs. Execution time below 25 ms. Like I said, we're like accustomed to be working with brokerages, so like the best liquidity flow. No slippage, no requotes, fast deposits and withdrawals, leverage up to 500 or 1,000 for some regions, and we have a dedicated Arabic team, obviously, so you can be served in your language. I'm going to be showing whatever I'm showing with the C-Trader platform. C-Trader was lately, it has been in development also for 12 years. It's the most advanced trading platform in the world. It supports a lot of advanced risk management features, which I'm going to talk about during this presentation. Features like you can trade with 5 trading methods. You can see pip value and margin calculations in C-Trader. You can set default protection setting in quick trade. You can do a server-side trailing stop. You have advanced protection. You also have trade statistics per symbol, and you can do copy trading if you don't want to get into the risk management thing. This is how the new C-Trader looks. The 5 trading methods that are supported are trade. You can trade manually. You can trade with automated with C-bots, robots. You can copy trade. You can have in-platform signals or trade with a fixed API. The copy trading on mobile, you can view and rank top-performing strategies. Copy trading is if you don't want to trade yourself, you can just find another strategy provider that he's doing well, and you can set up his account to be trading, your account to be trading with wherever he's trading and get the same results. And you can do a lot of things via C-Trader. You can view their history, statistics, you can rank strategies, you can copy trade with one tap, copy between brokers. And generally, for someone that is new to trading, maybe they should check out copy trading and see how successful traders trade before they get into it. For the rest of you guys, we can talk about risk management. So now we're going to start the main topic of the presentation, which is risk management. Before we start, we should define what we mean by risk management. Risk management, and let's start talking about the trading strategy. What is a trading strategy? Having a trading strategy is when you know when you enter and when you exit the market. And not only when, but also why. You don't do random things. You don't go randomly clicking buttons and trying to see what's going to happen. You know why and when you're going to enter and exit the market. Risk management now is knowing exactly how much of your capital you're risking with every trade. This is really important. So in order to be a good trader, you definitely need to know why you're entering the market, why you're exiting the market, and when, and how much you're risking every time you're entering and exiting the market. If you don't know any of this stuff, I would suggest that you don't trade at all or don't invest at all, because it's going to be really difficult for you. Risk tolerance for an investor it's a really important concept and something that new traders or investors never think about. Risk tolerance is understanding and knowing how much drawdown your account can take before you stop doing your investor strategy, before you stop trading logically, before your emotions take over. And I'm going to explain it like pretty simply. Let's say that you invest 100,000 USD in the market. What is a number that you're going to lose in equity before you go crazy and cannot trade anymore? Is it 20,000? Is it 50? Is it 70? Whatever it is, there's a number here for everybody, and you have to know it before you start trading. If you don't know it and you reach that number, you're going to lose again because you won't know what you're doing. If you just throw away like 10,000 USD in the market, and after a week, instead of 10, you have 6, and you're not expecting this, you're not going to be able to make any rational decisions. So this is the definition of strategy, risk management, and risk tolerance, which is things that we're going to use in the rest of the presentation. So examples of having a strategy. I told you, like, you need to know when to enter and when to exit the market. So an entry with a moving average, which is a technical analysis. An entry with fundamental news. When Fed raises rates, I'm going to enter the market. Or an entry based on some price. So for example, you want to invest in Facebook, previous Facebook, now it's called Meta. If it falls below 100, it's a good price for you, and you know that you're going to exit above 250. This is having a strategy. You know when you're going to enter and when you're going to exit. Risk management examples. If you risk 1% of your total equity per trade, for example, you have a 100,000 USD account, every trade must risk 1,000 USD. You cannot lose more than that. Using a trailing stop loss, which is a stop loss that follows a price. Or, you can risk all of your equity in one investment. You can be like, I'm going to invest all of my money in Meta or another stock or in Euro USD or in gold, and I can lose it all, I'm fine. It's okay, as long as this is your plan and you have a strategy and this is your risk management, it's fine. Invest all of it, but you know what you're doing. And you can also diversify by splitting your investment into 10 different assets, for example. This is also risk management. Risk tolerance examples. I feel comfortable if I lose like 10% of my capital, 50% of my capital, or I can lose a whole of my capital and still be executing my trading strategy. Practically, what you need to do proper risk management. Assess your risk tolerance before you start trading, so understand how much you can lose before you lose your mind. Diversify to multiple symbols and multiple positions. Don't throw all your eggs in one basket. You want to trade in stocks. You don't need to do crazy things, just find 5 good stocks. 5 is enough to diversify. You want to trade Forex? Okay, trade a couple of currency pairs. You want to trade on metals? Trade gold and silver at the same time. Assess volatility before trading. Volatility is the rate of change of a price of an asset. So, for example, how fast it's changing. When you have high volatility, you're going to have bigger drawdowns, and things are going to happen a lot faster. And you're going to lose faster, and also you're going to gain faster. But the important thing here in risk management is that you're going to lose faster. So you have to know if you want to trade a volatile market or not. If you are an investor that cannot take a lot of risk, now is not a good time, because it's panic out there with the Fed raising rates and everything, you understand. Then you need to have a well-defined strategy, so know exactly when you're going to enter, when you're going to exit, and how much money you're going to risk. And having predefined entry and exit rules. So that's how you do proper risk management practically. Okay, now about assessing your risk tolerance. It's really difficult for younger investors to understand the risk tolerance. But it's really important for everybody to invest amounts, only amounts that you can afford to lose. For example, you cannot mortgage your house and put it in the market. No one can take that. Maybe you're going to be lucky and make money, but with the smallest drawdown, you're going to panic. You cannot work 10 years of your life and save, I don't know, 500 euros per month and then put it all in the market. It's not going to go well for you, trust me. So only invest what you can afford to lose. Understand that markets can fall very sharply. So when you invest something in the market, in a couple of weeks, you may be 50%, you may lose 50% or whatever. Then don't underestimate how much equity you can lose. Don't overestimate, actually. Everybody overestimates. They think that they can lose 50% of their equity and be fine. No, you won't be fine. And understand that depending on your risk appetite, there is always a financial product for you. Like CFDs are very high risk for very high tolerance investors. Option futures also high risk. Cryptocurrency high risk because they move a lot. Stocks, medium risk, they don't change that much. Bonds, very low risk. And you can also keep your cash, which also has a risk because of inflation now. But it's lower risk. I talked already about diversification of your investment, split it into more than one asset. For example, trade 3 currency pairs instead of one, invest in 5 stocks instead of one, invest in top 5 cryptos instead of just one, etc. Assess volatility. There are tools like VIX that can help you to assess volatility. I don't want to go too much into information about volatility here because, as I've seen, the other presentations were more basic. But let's just say that if the market is moving very rapidly, you have to have higher risk tolerance than if the market is not moving as rapidly. Understand your trading strategy. So again, you understand how much you're going to invest, how much you can lose, when you're going to enter, when you're going to exit. You can trade with technicals, you can trade with fundamentals, you can trade with a mixed strategy. And there are many different trading frequencies that you can trade. You can be a scalper, you can be a trade trader, a swing trader, a long-term investor, or a passive investor. All of these make your trading strategy. Really important understanding also your statistics of your strategy, like average loss, average gain of your position, profitable positions percentage, etc. Have predefined exit rules, like I said, either based on technicals, based on an event, based on fundamentals, based on stop loss, or based on equity stop loss, or profit to loss ratio, or whatever it is. This is an example of exiting on technical analysis. We see that we enter when there is a moving average crossover, and we exit with the other side that we can actually not see because of the chair, but you understand. In CTrader, you can check the pip value of your position in order to be risking a percentage of your account only. So, for example, when you're setting a stop loss, as you can see there, you can see that if you have an equity of 50,000 euro, you can only, with 200 pips, you can risk 2,000 euro. And this is like a way to risk a specific percentage. You can set up advanced protection in CTrader, so you can close your position with multiple take profits instead of just one. So you can, for example, here you can split and have a take profit like a 100K position. In 25 pips, get 25K. In 50 pips, 25K. 70, 25 more, etc. And you can also move your stop loss to break even. These are really important risk management tools that CTrader has. And an example of risk tolerance, like your drawdown, you can have, like, if you invest 100,000, you can have a risk tolerance of 10% for 10,000, or 50% for 50,000, or the whole account. The profit of loss ratio of the position, if you want to trade with this method, is like your stop loss to your take profit. So if you want 1 to 2, for example, and you put a stop loss of 50 pips, you must have 100%. 100 pips take profit, or 1 to 1, like 50 and 50, etc. Trade statistics are shown with CTrader per symbol. So if you go to the symbol panel, you can see trading statistics of your strategy. And That was the end of the risk management presentation. Unfortunately, as I said, it's not a topic that you can talk about easily in 15 minutes, but at least what you need to take from this presentation, which is really important, always have a trading strategy before you trade. Always know how much you're risking per trade. So your trading strategy, knowing when to enter and when to exit the market. Know how much you risk with every position and how much risk tolerance you have, how much you can afford to lose. This is really important with trading. If you know all this stuff, then you have some sort of risk management strategy and you can survive in these markets. Visit topfx.com.sc to open an account, tap open a live account, fill in your details, fund your account, and you are ready to trade with TopFX. Our KYC is very fast. We will approve your account really fast. You support Islamic swap-free accounts, dedicated Menati in Arabic. Thank you very much. Sorry for that. I'm not speaking Arabic, guys. It's English, but we have to do so. Thanks a lot.